There we go. All right, perfect, excellent. So if you guys want to go ahead and hit me up in the comments for anything you want to see. I want to open up today with Churchill Capital. Angelito, I'm glad to see that you were there waiting for me. Always appreciate your company. It was an excellent vacation. So after honeymoon and then a little bit of time to kind of get settled in and then recover, then go on family vacation, it was a lot of vacationing. But it's good to be back here and finally good to settle into some consistency with the live streams and just getting back to the normal YouTube business. And, I'm really itchy and ready to go for it. So thanks for asking. All right. So CCIV, let me go to the pre-market, and here we are. They got their special meeting today at 10 a.m. So that's coming up in about 39 minutes. We should hear the results of the votes. Anybody who didn't vote, I was just reading about this, anybody who didn't vote is counted as voting for the merger with Lucid Motors. So that's excellent. So if there was anybody who did fail to vote, such as what we had with ChargePoint and Switchback Energy, that's for them, they didn't have enough votes, so it didn't go through. But for Lucid, if they didn't get those votes coming through, they were counted as for the merger anyway. So that's kind of an excellent place to be. So I placed my votes a while ago. Whenever voting opened, it's I don't remember the exact date. I just remember getting an email from my brokerage, TD Ameritrade, that said, "Hey, vote now." So I did, and of course I voted for the merger. I'm excited to see it take place. Great morning coffee. All right, so pre-market, not a lot going on. Looks like from yesterday, this low 23s or so. Also somewhat going with this little double top that we have over here. Not much to see. Let's go to daily to see what we have going on here. Look at the price walls real quick. Again, about 23.20 is what we actually see where a lot of support comes in. 23.35 if you look at what we have here. Resistance at 23.55, 23.65. We got some big orders. They don't mean a lot during the pre-market. Those orders can be placed, but it doesn't actually mean that they're going to go through. And especially in the pre-market hours, you can sort of set that support and resistance if you're one of the big money players to kind of get a lot of other orders going. And then you can totally change your position or change the order, I should say, that you have going on. So it's something to watch out. We'll know more when the market opens in the next 7 minutes or so. So looking here, I have a couple different lines drawn. So I was talking before about this linear pattern that we had, and you can see after a while it finally broke. It looked like back here on July 8th. Actually, we fell below that line. And then what else do we have? And then we came right back above it for a little bit. And then with the sell-off with everything else, dropped down, a little bit of a reversal. So here we have the 19th, which is Monday, which is kind of a rough day for stocks. It's actually one of the times recently that I was actually able to increase my position in some different stocks. And, it was nice to actually have that opportunity because since the middle of May, with a lot of this uptrend that we've had, this really strong uptrend, there wasn't a lot for me to do. At least as far as dollar cost averaging goes, I do like to buy on the red days, and I wanted some reasonable prices. And with the high valuations that we already have in the growth plays, I wanted those big dips, and so we saw one. So I put a little bit more on my positions. All right, Nvidia. Oh my goodness! Let me hit the right buttons here. Perfect. My little bit of coordination that I had prior to this back. All right, so am I correct that they just had a 4-to-1 split? Is that? Let me see. There we go. Yep. Nvidia stock climbs. The city lifts the price target following the share split. This is something that was anticipated, was what was going to happen following that. According to the analyst average, we have 46 analysts on this one, and it's not surprising that we have such a strong coverage over this. It's a big company, and we have a rather significant price wall right around, looks like 196.50 is when we really start to hit this. A lot of sell side pressure showing up in the pre-market hours that we have here. I actually want to check out tip ranks. So just in case some of you are new to this and you haven't been following it, tip ranks is one that I just recently put out the premium membership for because I like to actually be able to see how new the different coverages are, and especially with doing the live streams, I think it's nice to be able to talk to you guys about how recent the estimates are. So that way we can really see what we're talking about, see what has changed for the company, if anything. So there you go. We'll toss Nvidia out there. Okay. This hasn't really, I'm guessing this hasn't updated since the split. So let me see, 700, 175, just under 175 for that. So it'd be 172.50 if we divide that by 4 to take into account that every 1 share is now 4 shares. So this needs to be adjusted since the split. So when we look down here, we have some updated ones. And this is exactly what I mean by wanting to get tip ranks, the premium ones, so that we can actually see how recently these were put out. So 7 days ago, that $900 price target, that would be phenomenal. But that's pre-split, I'm certain. And so when we look at these that have been adjusted for that, so if we take from Mizuho Securities and divide that by 4, divided by 2 is 450. Another 2 after that is 225, which falls in line with what we received from Citigroup, Barclays, and Oppenheimer. So we have some big names coming in here. Look at all the 5-star analyst estimates that we have, the return rates and everything. This is just absolutely gorgeous. So let's go back to Nvidia and see what we see in the charts. Currently at 194. Let's just call it 200. So from there, what, like a 12.5% upside? Good morning, Sean, and good morning, Sinan. Great to see you. We have about 3 minutes here until the market open. No problem, Sinan. I really appreciate it. Candy American Battery. All right. So I could check Candy's one that I haven't done a lot of reading through for a while here. I know it's a smaller company, so that would fall into one of those high risk, high reward areas. I'll take a look at it as soon as we get the mark. Actually, let's visit the chart quickly. There we go. Candy Tech Group, go with these. Just make sure I'm remembering this one correctly. Diversification, distribution. Yep. Okay, so one of the smaller EV plays that we have. No analyst estimates on this because it is going to be smaller. Let me see. Ooh, we got an acquisition. 7.7 million expands battery cell business acquisition. Excellent. All right, I just wanted to read up a little bit about the news on it. All right, so I did mention that this was one of the smaller plays that we had out there, and this is probably the middle of May, or it is. So 511 to 513, that was sort of the bottom of the tech and high growth sell-off, and it rallied a little bit, traded sideways a little bit, and then we had a bit of a drop. So we're off the area of support in the low 5s from there, and we've actually come back up above the 50-day moving average. So we're actually sitting near a form of support through that 50-day simple moving average as we watch that take place. We do want to see this 200 period start to curve upward, and this 51 start to curve upward with it, and where they cross each other is actually a really bullish signal for us. So when you take a look at that, take a look at the RSI as well. We've also started to go back into bullish territory there as well. So I'll get to ABML soon. And Sean, if I didn't say good morning, good morning. All right, let's check in with some of our other ones that we have going on. Right here's Xpeng. There we go. So when I started seeing the sell-off happening on Monday, I was like, all right, some opportunities to buy some stuff. And Xpeng did drop down below. Where's the 19th at? It's right there. And yeah, so this opened at $38. And I was thinking about adding to my position when it was at that price. And the closing price that we had was closer to $40. And I really want this cheaper than that. Actually, about where it bottomed out is about where I start thinking about it. Under 35 is where I really want to start taking more of a position for myself in Xpeng. So EVs in general, where are we at? I want to keep an eye on the time here. There we go. Uh-oh. One moment. Apparently I hit the wrong button there. Actually, I know what I did. All right. Well, we'll go here for the moment. There we go. While we're waiting on that, I want to look at NEO. And the cool thing about NEO, when you look at the analyst estimates on this, and you look at the time frames that they were put up, there we go. We have to go back 8 months time. Oh, there we go. That's better. So when you look at all the analyst estimates, you have to go all the way back. It looks like 5 months ago to get to Jeffries before you finally hit a downside from its current price. So seeing that under 40 was something that I like to see. Again, I still wanted NEO to come down considerably in order to hit that value. There we go. It looks like this jumped back up, and our market is open. So let's just go to NEO here and go into their intraday. There we go. So you can see that that strong build back up that we had to open the day yesterday, and our open was at $44, and then we opened today. Come out to this candle here. This is the 30-minute chart that we're looking at. It opened at almost $47 per share. So really, we have to watch what the overall market does. We have the news about the Delta variant, but the good news about the Delta variant when it comes to the stock market, I'm talking as it's related to finance, is that it doesn't seem as though we're as quick to shut things down again. And I think that one of the big differences is preparation, and then it's not also a big question mark. When COVID first hit, nobody knew what to expect. We thought that it had an ultra high death rate. And, not that there have been tragedies and not that there's still not significant cases out there where people are experiencing severe symptoms or anything. But we do have vaccines. We have knowledge about how to care for ourselves. We found out that the death rate and severe infection rate is much lower than we initially anticipated. I just don't think it's going to have the same gripping fear that it did when the pandemic first hit. So I don't think that we'll see something like we saw back in March with the stock markets and that same sort of crash. So for NEO, trading in the mid 40s to maybe even the low 50s in the near term, I think is about right. If we see it drop significantly into the 30s, I think that those are buying opportunities. And if we see it go into the low 50s or even into the mid 50s, I think that we're going to expect to see it to pull back in the short term. With that said, back over to what I was showing in tip ranks here. When you look at the analyst estimates, the last hold that we had was 5 months ago, and we have a lot of buy ratings from a lot of big companies. And there's 50, so less than they're giving the upsides here. I absolutely love this. That I like doing the mental math. So don't get me wrong, I'm a math nerd at the end of the day. So 7% for the low one that we have for something as recent as 3 months ago, and when we get to the ones that are within, we'll start with last month onward, 57, 64, 65, 72, 69, 60. We have significant upside over the next 12 months by pretty much every analyst that's coming out and covering this, including the high ranked ones and the some of the low ranked ones, or even this one right here who's not ranked. Well, hopefully they for themselves, they become known and they rank themselves quite well. We'll see as time plays out how that goes for them. So 64, 22, 36% upside over the next 12 months. All right, let's see what else we got moving. The CCIV warrants. All right, let's go to CCIV. There we go. They're less than 30 minutes away from their special meeting, and right now it says that they're up 3% from yesterday's close, so popping up over $24 per share. Decent amount of sell side pressure coming around in the mid 20s. So there's you go, big order taking place at 24.20, and then you have more at 24.29. So keeping us right around this blue line that we have, which is the 50-period simple moving average. So in order hitting that could act as resistance for us. And this is one that, as that meeting happens, I wouldn't be surprised if it does happen to sell off as we switch over to Lucid from CCIV. I'm bullish over the long term on it, but in the short term, I could honestly see this dropping back down. It depends on a lot on what the rest of the market does and what the EV market does. So when we watch that going forward, we really want to see them hit their deadline for their production for 2021. They said second half. Let's hope that they hit it. And let's also hope that in 2022 that they have strong, not only production numbers, but delivery numbers, and that their orders continue to stay strong, and that they either keep their guidance for 2023 and 2024 unchanged, or that they increase their guidance, or raise their guidance, I guess I should say, for their production and deliveries for 2023 and 2024. And I think that's really going to help us out. Their market cap is somewhere around like 30 in the high $30 billion range right now, given the current price that they're trading at. So that pulling back to be something lower, considering how it compares to some of the other car companies that are out there, and that fact that they're pre-production, everything that is trading at right now is fundamentals and hype. So after we get past this big news, we see some of that hype finally come out of it, and then we see more of what the fundamental prices are saying for CCIV going forward. All right. So Sinan, I'm going to toss ABML up there for us. There we go. All right. So ABML, wow, they've really fallen down. Let me go to the daily chart here so we can see a little bit more. So this is going to be a momentum play. This is going to go strictly off of news, and it's going to move a lot with the momentum players that we have. So for them, they got permits. I think it was about 2 months ago. They finally got the permits from Fernley, Nevada. They got the approval to go ahead and build. But the state of Nevada, I don't know what else they have environmentally to establish through Nevada in order to actually break ground. And they did the symbolic one in September of last year. But from there, we actually need to get the actual groundbreaking going, where they start really getting the big machinery in there and digging out the foundation and getting things set up. And then once they have that built and they move into their lab phase, I think that we have a number of catalysts in there. One would be the actual groundbreaking. Let's take a look at the news. There you go. So we had a pilot plant update on the 8th. Rather than looking at the news here, what I would recommend, at least as far as looking for news on this, you can go through their PR page, the investor relations on their website. That'd be one good place to go and look, where they talk about themselves. Twitter is actually one where you're going to find a lot of dedicated followers. So you can go there and type in $. This has not worked well for me, but keep your fingers crossed. There we go. I'll try to bring Twitter up here and then do a search for $. You put in a $, and then the ABML. And then when that comes up, you should find news related to it. And trust me, being Twitter, you're going to have to pick through the weeds that you have on there, and you're going to have to pick through the garbage, because there will be a lot of garbage and spam and people trying to get you to do buying in really silly ways. So I don't recommend that. So you can look at top news, where you get a lot of the top ranked stuff. But if it's something that's happening today, something that you want to know what is going on today, you can look at the latest news. And by filtering it by the latest, like I said, you're going to have to just pick through a lot of stuff that doesn't really tell you much of anything. And you're going to have to look for things that actually seem legitimate. And then you're going to have to check into whether or not that news is legitimate. And I don't know your tech level or anything like that, but I do not recommend clicking on links that are within the Twitter posts. Rather, I would go back out and do a search in whatever search engine you use. For me, I'll use Google a lot of times, and I'd like to find it organically my own way, rather than trying to figure out through the links that are in here. So this one doesn't really tell us much of anything. It's right there. It's mentioned. It's the latest. Let me see. And then here they tell you a little bit, but they don't really tell you much of anything useful. So at least as far as currently, with the low price that we have and the fact that out of the latest stuff that there's really nothing significant talking about the price. Let me see. Yeah, that doesn't really tell us much of anything. Sometimes, and only sometimes, if this were a day where there's a big move, you could probably come and actually find some decent news on it. But just to give you an idea of some of these smaller stocks where you're not going to find analysts covering them, sometimes you can come to Twitter and then find them that way, and that can really help us out. Let me see. Got somebody giving their opinion. Doug Cole. Let me see. That's just, there we go. Critical Minerals had an infrastructure package. Let me see. ABML. Naming somebody. Yeah, so I'm gonna stop the view here. You sort of get the idea of going to Twitter and just looking to see if there's news happening. And sometimes you look at the right time for those smaller companies, like you see a move in the pre-market or something like that, or you expect something to come up, or sometimes it just fall on a catalyst that's coming up in a few days, and that's something that you can look at. So for the smaller companies, when you find that that niche crowd that does high coverage and does a lot of high focus because they dump a whole lot of cash into these stocks. And they'll sniff out any little scrap of news that they can. You can do that, and sometimes you can find out when it's going to move for us. In the meantime, my position in this is small, and it's small on purpose because this is a high risk play, and I don't want to compromise myself financially with this one. I want them to do well. You know, I absolutely love environmental plays like this one for lithium recycling and, you know, making the whole EV space even greener and better renewable energy overall are things that I can definitely get behind. Meantime, check out the 200 period moving average that I have here, and the fact that we tagged it back here and now we're tagging it again, and now we're just above that, and then this blue line is going to act as resistance. So staying below $2 without significant catalyst is something that could definitely happen, and staying above about $1.50 again without any of that significant information is something that could definitely happen. All right, let's see what else we got going. All right, actually, I know one. There we go. I'll show you this one. This is one that I put a purchase out on Monday. On Monday, I saw this dip below $60 per share, and for me, for apps, APPS, Digital Turbine, anytime they drop below that $60 per share, it happened back in here, and I bought some shares, and then it happened again over here, and I bought some shares because this is one that I am bullish on, and we can see that 200 period moving up very nicely. And you can see that we broke that support, and since then we've returned to it as of yesterday. Let me see the opening price, $62.60. And so I think I purchased somewhere around $58 per share. I can say 59 just to round up, but it was definitely below 59. So that would be 59 is like right about there. So I timed it decently well. It worked out for me this time. And for me, this is a long time horizon sort of play. Analyst estimates, 5 analysts covering it, average analyst estimate, $107 per share. And I like to look at the low one here, that even if we just make it to the low analyst estimate that we have on here of $86 per share, we still have like a 30% upside in order to get there. All right, PSFE long-term, no problem, Sanan. Paysafe, there we go. All right, we have 7 analysts covering this. That's a good thing. We're also significantly below any of those estimates that are out there. Also a good thing. What about between 40 and 50% upside to that low analyst estimate, over 50% upside to the average that we have here. Let's see where the price action is currently putting us. Oh boy. All right. Check out the profile that we have here. Limited digital commercial, has user return trackers. Okay, good. Well, at least as far as when you look at the history of the price action that we have for Paysafe, this looks like it was probably a SPAC deal coming out. And so back here on May the 13th, our low price was 10.08. And just recently, we hit a low price of 9.79. When you look at the lows here and thinking about those as acting as support, we're at 10.63. We're about 10% up from the most recent low that we've had. Seeing those new lows go in, especially when you look at this, that we have that hammer candle taking place, this can usually be a sign for us that things can reverse. That was a frightening day, like Monday, trying to buy that day for a stock like this one. That's probably a growth stock and earlier on in its history. And it's not been out for a long time. You don't see the orange line on here because there's not 200 trading days to view on this one. We are significantly near the bottom. We're below the 50 period moving average. You can see as early as back here that it was really acting as resistance for us. It still acted sort of as a resistance for us. We broke it for a day, but when we closed on that day, which was 1234, we closed right back near that moving average. And then since then, we've failed to break it. So that's something we can look at. If you bought this now, you would have less than $1 worth of room to run. So you have about another 8% up before you hit resistance, and they're closing towards each other. So it won't even be 8%. So without knowing a lot about this company, just looking at what we have, even if you take a look at the RSI, we almost hit oversold, but we didn't. And we're below 50, so we're still in bearish territory for this one. So if this is a company that you would be in for the long term and looking at it from a fundamental standpoint, then now could be a great time if you believe in those analyst estimates that are out there, because there is significant upside ahead for Paysafe according to those analyst estimates. So really, it's based on where you believe that this is going. If you're doing this as a swing trade, or as let me see, there we go. As a swing trade, you know, it could be a little bit dangerous. So it's kind of good because it's near the bottom of where it was at, but it's also buying near resistance. So it depends on what sort of, how much you're looking to make off of that one. They have a decent start to today, and it looks like they came back really well from this support that they had before. I've already mentioned that. So up 1.23% today. What I have here with a lot of these growth stocks, is these are the ones that people ask about. You know, we've got a lot of green if we look at the red side of things. And I'll get to crypto soon. I haven't forgotten about it. There we are. Yeah, the red side's not so red. The green side's not too green. So if we look at where the overall markets are going, I'll expand this one. There we go. We got the Dow about even. We got the S&P just about even. The NASDAQ is the one that's up the biggest at about 0.25%. So that's where we find a lot of our tech plays. Not too bad. Let me see. So that kind of goes along with some of the prices that we're seeing right now. Polygon being up about 6%. I actually want to go to CoinMarketCap in order to look at those. Just let me scan down through real quick, see what else we got moving here. You know, it's actually a little bit, because I am a long-term investor for the most part, I was a little bit disappointed that the sell-off didn't last a little bit longer and that the prices didn't get just a little bit cheaper. I bought a little bit, but I was waiting for the next day for a bigger drop in order to buy a few more things. Because I think that would have really put out some nice opportunities for us. And then, you know, we had a healthy rebound. So for people who get worried about their stocks dropping, that rebound can, you know, allowed them to breathe a little bit easier, made them feel better. For me, I like that my portfolio, my growth portfolio went back up. I don't like that it dipped. You know, those are the feelings that I have about it. However, if I wanted to add to my positions over a little bit longer term, then that would be the time. But I was waiting for things just to get to be a little bit cheaper than they were. Bitcoin has retaken 32,000. Ethereum has all but taken 2,000, still acting as resistance for us. I want to bring up Polygon, which uses the Matic token. There we go. So for those of you who don't know, I just got back from my family vacation. So I wasn't on YouTube, but I was still checking out the stock markets and the crypto markets. You know, I get up earlier than the rest of my family does. So that's usually when I would watch that stuff. But then during the day, because it was vacation, family vacation, I was spending time with them for the most part. But I did notice that Polygon dropped down. Well, first of all, when it dropped down below $1, I was like, oh, cool. You know, I'll buy some. And so I did. And then I watched it drop down below 90 cents. I was like, oh, cool, I'll buy some. And then I watched it drop down below 80 cents. I was like, holy cow, like this is awesome. So, and it's awesome because of what I believe about Polygon being the layer 2 solution that it is, that runs as a side chain to Ethereum, and that there is so much adoption for Polygon that has it's really scalable, super fast, and then it uses the security that it gets from the Ethereum blockchain. I think that this is going to retake $1. It might take a little bit for Ethereum and Bitcoin to have enough influence on it to allow that to happen. But you can see this low that we had. I'll zoom in just a moment here. Let me get a better window for you. There we go. So when I zoom in here, if I put my cursor down here, you can see it tagged 62 cents. But when you look at that close that it had on that red candle day, it's much closer to 70 cents. And then yesterday we had a significant green day, not enough to really have us break this line up here at around 95 cents. So that's about where we're finding resistance right now. And I think until crypto makes a big move, and when I say crypto, I really mean Bitcoin and Ethereum, because this will be tied to both of them. Until they make a big move, I think that we could be held at resistance under $1. So 95 cents seems to be one of those places. but certainly under $1 until we get a big break to the upside for Ethereum. If we get a break to the downside for Ethereum, if it happens to finally drop support and a breakthrough down to like 1700 or even break through that, I'd have to look at Ethereum to see when the next support level is after that one. But that could also affect the price that we see in Polygon. And let me move my screen just a little bit here. There we go. This was at its highest, trading up over 260, and then it was recently at 220 after a Mark Cuban pump, and then it's sold off significantly since that time. But it is gaining adoption, and it is one that you have more and more use of all the time. So the use is going up, and we actually have really good volume coming back into it. So that price dropped, and then we had the volume support there along with the positive price action. These are good signs for Polygon going forward. All right. Good morning, Luis. So I'll get to Romeo Power soon here. Let me pop back out of this, and I want to look at Ethereum. There we go. So like I said, with Ethereum, still bumping up against resistance at about $2,000. And I think that, we're going to go status quo for a while with Ethereum and with Bitcoin. And, for the bulls out there, I hope that it proves me wrong, that in the short term that we see, more bullish behavior come in and the bullish price action happen as a result. But really, I think that there's just too much going on that's giving too much confusion and giving too much noise in order for us to see that price action really take place. When you look at these last 3 days of trading for Ethereum, it looks like we're looking at the last 3 trading days that we had for the Polygon chart that I just showed you. It's had a sell-off just like what we saw with Polygon. This one had a little bit more of a dip in the middle, whereas it was more steady for Polygon. And they're moving together in the meantime. So when you watch this take place, for me, below 2,000, it's not a bad place. And what we've seen for more recently is actually getting close to that 1,700 mark. If this drops below 1,700 for the bulls out there, if this drops down below 1,700, we are in like super good shape down to 1,500 and then down to 1,300. So it looks like it's going by like $200 increments from 17 to 15 to $1,300 per token when you watch this take place. And for me, being bullish on Ethereum, for me, those are buying opportunities. For the bears out there who think that this is going to be pushed lower, well, if that's the case, you can just take a look off the most recent highs that we've had. We've had fairly linear decline in these high prices all the way since the beginning of June, it looks like, until today. We really need this to break higher. I don't know if we'll see it today. Right now, we still have a narrow range doji, but after that green candle, maybe we'll see a reversal to the upside. And we really want to break this previous high that we had, high price, about $2,400 to the upside. So that'd be significant from where it sits right now in order to get back up to that $2,400 mark. And then also to break it, it would take a lot of upside, pressure from below, we'll say, to push us up that high. All right, upward pressure. My goodness, I'm about one sip of coffee in this morning. Now I'm twice as good because that's 2, and I'm going to pretend that that's scalar. So let me move back over here. Penn fundamental play. Okay, Romeo Power for Luis, and then Angelita will check out Penn. Ooh, very nice. All right, 7-11. I wonder what if there's news that goes along with this drop that we saw, because we actually had a decent climb for them. They tagged bottom back on Monday, okay, and then the strength built, went overbought just for a moment, and then stayed bullish through the day, and then today came, and we're getting close to oversold territory. We actually, if this is a stock that you're bullish on, you want this to push down a little lower in order to create a buying opportunity, in order to see it turn around from there. So we'll see if that happens to take place. Let me look at the daily chart for Romeo Power. All right. All right, so I remember talking about this before. I think it was even after it dropped down below the 50 period that we have here. We've sold off significantly. Okay, yeah, and I have this this blue line drawn on here for you in the mid sixes or so, mid to low sixes that we have. And you can see we almost came down and tagged that low, and then we started coming back up again. Really, we want to see the end of this downward trend. I actually had that line on there from before too, where it started turning things around, and that sold off a little bit. So we still have a little bit of weakness. However, it is continuing to hold that support in that mid 6 range. So we have a decent area of support down there. And as far as resistance goes, we sort of traded sideways. So when you look at the RSI, it's not going to tell us as much as we want to know during this time. And like something like the MACD would make even less sense when we start to see consolidation like this, because it starts to throw us false signals. It's more for strongly trending securities, and this isn't strongly trending right now. We've looked at the analyst estimates before. A lot of the risk has come out. We are not too far above resistance right now, about 10%, which is a significant downside. We have even more of an upside, though. We have $5 up from there, so 5 out of 7. So that's quite a ways up. That's what, 70% upside from where we sit right now. So for Romeo Power, I mean, it looks like it's starting to trade more sideways in the short term. And if it trades sideways, and if this bottom holds, then you know where the bottom is. And depending on the forward outlook of the company, we could see some of that strength come back in. You might want to look at energy plays. Let me see, machinery, tools. Okay. So yeah, you would want to look at the rest of the industry and see how things are going for them. And then let's take a look at tip ranks and see what they have to say. All right, we have one rating, and it's $15. That's out of the recent time that we have. So this is from BTIG. It's a 1-star analyst. What was this 5-star one that we had back here? $7 per share, 12% upside. And then we had Cohen and Company, not highly rated. Okay, so this being a smaller play, you're not going to get a lot of coverage on it. I was talking before, I think, to Sinan about thank you very much, JP. I really appreciate it. So this being a smaller play, it's going to be hard to find a lot of analyst coverage on this. You can check out investor relations to find out more about the company, but I think that you've asked about it before. So if you may have already looked there, but it'd definitely be worth a look just to see what the company is all about. And then I would honestly, I was talking to Sinan earlier about taking to Twitter for the smaller companies and, finding the people that very closely follow this sort of thing. So $ and then RMO, so $ then the ticker. And then you can look through the latest tweets, and you could look through the top tweets, the most popular ones, and you can pick through the information. Again, protect yourself from any sort of scammers or anything. I wouldn't recommend clicking on any links in there, and I certainly wouldn't put too much weight into the things that they say. I would go and I would check out the things that they say and find if there's truth to it, and I would be looking for any upcoming catalysts that they would have, or in the catalyst in either directions, bullish or bearish, things that would push their stock price up or down. And that's going to tell you more in the short term, and possibly in the long term, more of the reality of what we have coming up for Romeo Power. All right, who else we got? Angelito's asking for Penn. Penn has been struggling recently, so along with the other stocks. This one holding up above $100 for a while. If you saw this below 100, then it was the time to that you could jump in and expect it to go back up. And those days seem to have passed. They've struggled recently with their market share and how competitive they are. And so for me, let me see. Looks like right around $74. I'd be surprised if today it happened to break above 74. It has started to turn things around from its low. So Monday, a lot of things sold off. 63. That's a pretty strong sell-off. So that $63 mark could be pretty important for us. Where was this back here? all the way back in October 30th. So this would be some significant peak fear when you look at the end of October into the early November. And you can see what happened as soon as I think the 4th was election day. So let me see. Maybe the 3rd was the election day. There's Monday, there's Tuesday. Yeah. So the 3rd was the election day. And then from then, we had a lot of the fear come out of the market again, and a lot of the high growth plays because of what Biden was proposing to do with a lot of the stimulus and everything coming out. We had a lot of positive price action. Then we had the tech and high growth sell off following that. And you can see sort of the line that we're following. Let's see what the analysts say for this one. So 14 covers, not so bad, or 14 analysts covering it. So that's not bad, way above this bull case. I wonder if that's that underperform that we see there. We have 2 analysts rating this as an underperform. So that means 4 that are saying to hold it, and then 5 saying to buy it. There we go. And then it looks like we have 2 of them as a strong buy. I think that should come out to 14 of them. All right, so let's go over here. Check out how that compares to what we see on tip ranks. I like tip ranks because it shows, there we go, just how recently we had that coverage. So we don't have any coverage. Oh, I'm sorry. My goodness. Thank you. All right, so it just jumped for us. So Deutsche Bank actually coming out, 5-star analyst rating, 57.08 downside. And then when we look, I like to go within the last 3 months here. So 158, 103, 108. Okay. So we have 1 sell. We have a couple holds recently, and we have some buy ratings that are out there. Average analyst estimate, they're still saying it's going to push up towards $100 for the average. So really somewhere in there. I don't know that we would see it go all the way down as far as 31. It looks like they're saying 5 buys, 1 sell. So that must be within the past month that they're reporting on for that one. So we'll see. I mean, the gambling stocks in general. So let me go to MGM, for example. Now for them, they're a little different because they're, there we go. They're actually doing quite well when it comes to market share and competition. So we don't see the same sell-off that we saw for Penn National, and their bottom is somewhere around, it looks like 35, 36, almost 37. So $35 to $37. So what's that, like 13-ish% downside from where they currently sit right now. And we've had a rather good recovery since Monday. And we just need that. We need to see how high that's going to take us before it bumps up against resistance. Is it going to be that 50 period that we have here? Or is it going to be something lower than that? Is it going to just push right on through? Is it going to break resistance? We're going to have to wait and see how that plays out for us. My favorite one is still DraftKings. No problem, Luis. Okay. All right, so DraftKings. Let me see. 48.54. Let's go intraday on this one. Seeing DraftKings get down in the low 40s, to me, is where you start to see those buying areas. And you can see on the 30-minute chart on the RSI yesterday that went overbought a little bit, and now it came back down and settled. And we're just below 50, so we're just below that bullish territory, at least when we're looking intraday on the 30-minute chart for DraftKings. But this sitting in the high 40s to low 50s, this is sort of like Neo price-wise. That mid 40s to low 50s is about right for where you want to see it sit. If it starts to go into the high 50s short term, I'm not talking long term here. If you see it go in the high 50s short term, it's probably going to pull back again. With the rest of the market, that's of course given the present state of the company. That's without any sort of major catalyst that's going to push them upward. So some huge deal or some big news about their taking lead in all the markets or something, then high 50s would be something that would be merited, maybe even into the low 60s. However, the low 40s that we would be looking at like we had down here, popped into the really low 40s, and you can see it recovered along with the rest of the market. So low 40s where you find that buy zone, and pushing it down into the 30s is actually fairly tough, and that's a good thing. So when you see it getting to those low 40s, if it does hit high 30s, that's when I really start to say that for me, it's where I would like to do is find the next load zone, I guess. All right, it's 10:05. Here we go. Check the price action on CCIV. So we should be finding out soon about the results of their of the special meeting that should be coming out today. That happened at 10 o'clock. That started, and through their special meeting, if there's enough, well, actually, I say enough voters, but again, the news about the voters, that for people who didn't vote, and I was just reading a story on this one. If people didn't vote, it's counted as being for the merger. So that's a great thing. So if people didn't vote, sort of like what happened at ChargePoint, then rather than it being counted as not having enough votes, not hitting that majority, they're counting it as being for the merger and moving forward from that. And the last I checked, it also said that they're still accepting those votes to come through. So I highly expect this to become lucid tomorrow. And price action wise, after the merger for the SPACs, you can tend to see a sell-off that takes place. So yesterday, and yesterday was the end of my family vacation, so I wasn't live streaming then. But yesterday, having this price drop is normal to happen because that's getting near the merger date. And so dropping some profit taking before the special meeting, we see that happen. And if we see this drop down below 20, I think we start to get into really good territory. Seeing it stay in the low 20s to mid 20s, I think is about right. If it starts to hit into the high 20s and into the 30s short term, I think that's an area where we can find some limitation. So let me go out to the daily chart here. All right, so on the daily chart, there we go. I had this up at the beginning. So if you weren't with me from the beginning, I drew this before saying that this could act as a line of support for us for a while, that it wouldn't last forever because, I mean, that sort of linear growth is just, it's way too rampant. And so that would take us, I mean, by today, that already would have put us right in the high 20s. So about 2750, 2760-ish mark. And that would have been a little bit too rich too fast. I think that low to mid 20s is about right for the time being as it grows into the car company that I think that it will become. And the nice thing is after this sell-off day that we had, it's returned right back above, sitting on support here for the 50 period simple moving average, which is, as of right now, $23.30 is what we see over the last 50 periods. And we have a positive slope 200-day simple moving average right here, also a bullish sign that we're trading above it. So we're in really good shape. I wouldn't be surprised if we start to break support after we get the news that it switches over to Lucid. We're going to have to see that in tomorrow's live stream to see how that price action takes place. We might see it pending their results today. Whenever they give us the results of that vote, we could see that take place. So yeah, right here. It was what I was referring to, or one of the things that polls remain open for the merger with Lucid Motors. So we'll see what happens take place. I did hear that as of a few days ago, there was a lot of investors, I believe it was on Robinhood, who hadn't voted given their positions. So if you have any other companies that have any sort of news or anything like that, or have any sort of vote coming up for any sort of meeting, you can contact your broker. I have TD Ameritrade, which is where I do most of my trading through. And with them, they will email you about voting on a company when their vote does come up. They're very good about that. And then you can go through and you can do a proxy vote through your phone, through your computer, whatever it happens to be, in order to vote for the company in the ways that you want to vote as a shareholder for that company. One other thing I should mention, that even if you sold your position yesterday because you were a shareholder in CCIV as of 7/21, July 21st, you would still be eligible to vote today. Even if you sold it yesterday and no longer hold a position today, you would still be eligible in order to make that vote because of the way the dates worked out for that. So we'll see the way that plays out, and I hope we get some good things coming out of it. All right, let's check some of our other ones that we have here. Teledoc is one I haven't looked at in a while. This is one that I remember hearing about it around the time that the pandemic hit, and I didn't realize the strength of which people would buy into it. For me, it was one that I underestimated, and so I never really got that position in it. But when you look at this pre-pandemic, actually, I'm way too far back. There you go. There's March of 2020. So the lows we had here, about $100 up to about 153. And I was looking at, I was thinking that that was kind of rich, but it had amazing success throughout the pandemic, you know, with people at home and lockdowns. Peaked at over 308 and then went along with the big sell-offs and valuations. And so the argument that goes along with Teledoc right now is that as we rotate out of the pandemic, as things cool off and people get back out, they'll want to go back to doctors' offices, and you know, that's where they'll receive their health care. And so things like Teledoc won't be as necessary. But if you go with, like, I'll call it the ARK Invest side of things, where they believe that there's a paradigm shift occurring, where people will want to take Teledoc as just an overall solution for them, that there's going to be broader adoption for it, then that's one of those places where you can start to build a bullish case for Teledoc from its current price that it sits at right now at about 154. And if you look at the recent price action that we have for it, look how nicely those last three candles are sitting on support for us on that 50 period. So we'll watch that play out. And this is one that I need to do some more reading on to see if it's one that I want to take a position in. I don't currently have a position in Teledoc, but it being the leader for that, I'll call it online remote healthcare, one of those remote healthcare plays, you know, it's one that would get my attention first over others that would be out there. I'm going to zoom out just a little bit more just to see where these prices have fallen. All right, so versus May 13th of about 130. So we're up about 20 bucks from there. So what's that? About 15% up from the lows that we were at. And we haven't returned to those lows. So we could still be climbing. The next jump that we see, we want it to break us significantly back up towards this, if not over this last candle that we have here. The high price 174, the closing price 171. All right. All right, it's moving on to, it's 10:12. I'm going to go for about another 3 minutes here for the live stream. So if you guys have any stocks you want me to take a look at, go ahead and say so now. I'll talk about them. If not, I'll start wrapping things up, and I'll be back for another live stream tomorrow about 9:15. In the meantime, I appreciate all of you guys stopping by. And I'm going to keep an eye out for CCIV and the results of that special meeting. I think regardless of, I don't think I mentioned this before, regardless of what happens with that special meeting, if it gets shot down, which I don't expect to happen, but if it doesn't go through, the price is going to drop. If it goes through, I think the price is still going to drop. So the next thing that I think will happen with CCIV in the short term is the price drop. And if it drops significantly enough, especially below $20 per share, and honestly, being a bull on CCIV, if it hits $17 per share, for me, those are significant loading zones from that $17 to $19 range. I don't think that it'll drop that far. That would be that'd be a brutal drop from where it sits right now. But I already have a position in CCIV. And for me, it would be a matter of looking for the right time and opportunity in order to increase my position in CCIV going forward. But the next thing that I see happening, either way with the results of the meeting, is at least a small price drop. You know, we might be able to see 5 to 10% from where it's at. I don't know that we would get something much more significant than that. But, you know, you have to look at the outside market conditions and what's going on with the other EV companies in the meantime in order to know more about that. I want to take a quick peek at Tesla to see how they've been recovering recently. So there's May 19th was actually the lowest day for them. And they had a lot of news coming out there, and they're actually back up above their 200 period moving average. Good thing. They look like they're doing sort of a sideways trade right now, and they're about in the middle of that. So if you're doing any sort of swing trade on this, I don't know that now would be the best time, but we are getting near that support. And the analyst estimates on this, they're crazy. When you look at the analyst estimates, and crazy low and crazy high, and then you have some that are just about in the middle. 38 analysts covering it, and it's one of those plays that there was so much surprise taking place for Tesla. Surprise to the upside, I should say. And I think that they're an incredible company with a lot of potential, and that they're going to continue to be the leaders. When you just look at some of the way these comes out, hey, check that out. Credit Suisse reiterated $800 price target. Wedbush $1,000. Morgan Stanley $900. Bank of America $750. We had to go all the way to JP Morgan 16 days ago. And it's funny because they were right around the time with Goldman Sachs. Goldman Sachs came out a week later and said 860, JP Morgan 160. And it's funny that their opposing views are so far apart right now. So as far as multiples goes, the multiple on Tesla for right now doesn't really make a lot of sense. Going through the EV boom and expecting them to come out as huge leaders and just dominating in that market space, especially with autonomous driving priced in there, their power walls, solar power, everything that they have going for them. They should be a huge company moving forward. And, they certainly have that sort of economic moat that you want, at least when it comes to first to market and notoriety, and that they continue to have a large following. For me, I like to think of them as like the Apple of the EV space. So I'm going to keep an eye on them going forward. I'm going to keep my bullish position, and I'd absolutely love to watch this price continue to get pushed higher over time. All right, guys, I'm going to wrap things up for the day. Thank you so much for stopping by. Angelita, we'll see you tomorrow. Everyone else will see you tomorrow. Thank you for hitting me up in the comments. Anytime, just, go ahead and pop in, say hello, ask to see a certain ticker. I'll talk about whatever ticker it happens to be. Just tell you what I know, share my knowledge and experience with you. And like I said, I really appreciate it. There we go. I'll take that down for a moment so you can see more of my beautiful face. And just if you're still here, which way do I turn? There we go. In the background, over this shoulder. There we go. Can you see that unicorn? If you can see that unicorn stuffed animal among the rest of the shelves that are back there, that is from my younger daughter. She thought it was hysterical to put one of her stuffed animals on my shelf behind me, and I left it as part of the set so far. Both my children have great personalities, and they're a lot of fun. And I don't think that's going to be the end of their shenanigans over time. We'll have to see how that plays out. All right, guys.